I wanted to talk about some things that are getting a lot of attention lately: 50-year mortgages, portable mortgages, housing affordability, and institutional investors. These ideals aren't isolated. They are all a response to why housing feels so out of reach for so many people. Let's start with 50-year mortgages. Extending the mortgage from 30 to 50 years sounds helpful because it's expected to lower the monthly payments. But in reality, it stretches out debt for an extra 2 decades while barely touching the principal. Look at Japan, for example. They tried ultra long mortgages, even multi generational mortgages, and it didn't fix affordability. It actually contributed to a stagnant housing market where prices stopped moving and people carry mortgage debt far longer than they should. Additionally, longer loans let prices rise even higher because buyers start basing what they can afford on monthly payments instead of the cost of the home. It props up demand without adding supply, and that's not a real solution. Portable mortgages, though, that's something worth exploring. In the UK and Canada, homeowners can literally take their existing interest rates with them when they move. Here in the US, millions of people are stuck in the lock in effect. They don't want to sell because they would have to give up their 2 to 3% rate and take on a new loan at 6.5%, 7%, or even more. Portable mortgages with free inventory, more people would move, more homes would hit the market, and that relief on the supply side would help ease the affordability squeeze. It wouldn't solve everything, but it would loosen one of the biggest bottlenecks the market has right now. But here's the truth. None of this works without addressing the core problem. Builders are not constructing affordable entry-level homes anymore. The system pushes builders to build big houses or pack in as many expensive townhomes as possible because that's the only way they can make meaningful profit under the current rules. If we want more affordable housing, we have to make building affordable while keeping housing profitable. That means policy changes, incentives, reduced fees, zoning reforms, or something. It won't happen on its own. Another major issue is the rise of institutional investors. This one gets people fired up, and for good reason. A few months ago at a real estate panel at Duke, someone asked me how I compete with institutional investors. And I told them straight up, I don't. Regular home buyers do. Institutional investors are buying move-in ready homes, the same homes first-time home buyers are buying, or first-time home buyers want. They're bidding above asking, they're paying in cash, and in some cases, they're buying entire neighborhoods directly from the builders before anyone ever gets a chance. That's removing owner-occupied housing from the market and converting it into rentals, which drive prices up and opportunities down. First-time buyers simply can't compete with that. My business as a real estate investor isn't the same. I buy distressed properties, home that needs work, houses with outdated kitchens, old roofs, bad layouts, and I rehab them and either flip them or keep them as rentals. Institutional investors aren't touching those. They're buying turnkey properties that everyday buyers should have access to. Yes, to an extent, institutional investors do play a role in helping stabilize the market, but if left unchecked, they can swallow up the market and kill any chance of many buyers from ever owning real estate. So when we talk about affordability, the solution isn't one thing. It's not just mortgage terms. It's not just zoning. It's not just investors. The housing market is the largest supply and demand experiment we have in this country. And we can't tweak just one lever and expect the whole system to fix itself. Portable mortgages could help unlock inventory. Government incentives could bring back starter homes. And policy changes could limit institutional investors from swallowing up entire sections of the housing market or the housing supply. If we want a healthy housing market, we need a mix of smart policy, better incentives, and a focus of giving regular people a real shot at home ownership again.